The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Everyone, happy Tuesday. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you. Great to be back in the saddle again, feeling better. Like I said, yesterday took a couple days off last week, but we're getting there, so feeling pretty good. Lots going on at TFNN. We'll get into some key dates you want to remember in just a little minute, just a little while. But first of all, the phone number for you to call and talk to me is 877-927-6648. You can catch my show every day on TFNN from 3 to 4 Eastern, just in front of the Tom O'Brien Show. You can get my show as a podcast on iTunes if you can't listen live, and you can listen to all TFNN programming on your smartphone. All you have to do is open your smartphone browser, type in tfnn.mobi, and you can get the stream that way. Don't forget about Tiger TV. You can listen on your PC, and you can not only get the audio of the show on Tiger TV, but you can also look at charts live right along with me. If you're listening at your PC, the show is carried live on Channel 1, and it is archived on Channel 13. Now, if you want to look at Tiger TV on your handheld device or mobile device, just type in tfnn.com, and then over on the right-hand side of the page, you'll see a little box with some mobile devices in there. Click that box. It'll recognize what kind of device you have, and Tiger TV will start to stream right on your mobile device. So pretty cool. All right, a couple of things to get out of the way first. I have a webinar coming up at TFNN on Thursday, 1 week from this coming Thursday, January 17th at 6:30 p.m. Eastern. It's a free webinar for subscribers to my Ultimate Growth Stocks newsletter. Now, if you're not a subscriber, but if you want to check out 30 days free, you can sign up for a 30-day trial, and that will make you eligible to attend the webinar as well. So now is as good a time as any to check out 30 days free of Ultimate Growth Stocks. The webinar on Thursday, January 17th, is going to be titled 2013, A Year of New Leadership. It's probably not going to be a straight shot up for the market in 2013, but there are going to be profit opportunities just like there are every year. We certainly have gotten off to a good start in 2013. A lot of growth stocks out there flexing their muscle, but I think 2013 is going to be a year of great profit opportunities, and we're going to identify those profit opportunities with the Ultimate Growth Stocks newsletter. So webinar January 17th, and you can get more information right on the homepage of tfnn.com. Also, starting January 28th, the Great Panther Silver Super Silver Giveaway. TFNN and Great Panther Silver are going to give away 47 pieces of silver, a value of over $1,000. We're going to be announcing a winner every broadcast hour from January 28th through February 1st. Free registration. All you have to do is register right on the homepage of tfnn.com for your chance to win a beautiful piece of silver. It's going to be either a half-ounce piece of silver or a 1-ounce piece of silver. So beautiful coins from Great Panther Silver. More information on the homepage of tfnn.com. All right. House cleaning out of the way. Let's take a look at the markets here. 50 minutes left to go in Tuesday's session. NASDAQ Composite trading in the bottom half of its range right now. Fairly constructive action for the market since the big move for the major averages last week on January 2nd. You have had a big gap up for the NASDAQ on January 2nd over a key resistance level, kind of settling back here in light volume. The naysayers are out there every day, aren't they? They're talking about Washington. They're talking about gridlock. They're talking about the deficit and where these, spending cuts going to come from, entitlement cuts, fourth quarter earnings season going to be terrible. All the while, the market continues to behave just fine. As an individual investor, that's all you need to be concerned about right now. Kind of pulling back here over the past 3-4 sessions in light volume. Certainly no institutional selling going on in this market. So things continue to look pretty good here. NASDAQ Composite right now down about 10 points to 3,089. S&P 500. Let's see what the benchmark index is up to. Kind of a low vol decline for the S&P 500 as well. Same situation as the NASDAQ, just kind of, easing back in light volume here over the past 4 trading sessions, down close to 6 points today to 1456. And the Dow also slightly lower, not by much, in fairly light volume, down 56 points to 13,328. Yesterday on the NASDAQ, we saw 1.67 billion shares. We're tracking very close to that today. Same with the New York Stock Exchange, tracking very close to Monday's volume total, which was 623 million shares. Bond yields lower, but not by much today. 10-year note 1.87%, 30-year bond at 3.07%. February gold down 2.5% in the prior 3 trading sessions. Today up $15.90, 1% gain for February gold, settles at $1662.20, $1,662.20 an ounce. I've been saying in recent days the technical picture of the GLD here looks very questionable to me. Very questionable. It has been in a downtrend basically since September. You can see a lot of big red volume bars here. I like to keep technical analysis as simple as possible. When I learned how to gauge supply and demand and read charts during my years at Investors Business Daily, the learning process was not filled with multiple technical indicators. Bollinger Bands, stochastics. I know they are used and are very useful to some technicians out there. But really gauging supply and demand, price and volume is what technical analysis is all about. With the GLD, you've got a series of lower highs. You've got an ETF that clearly has been under distribution since mid-September, early October, and just recently in December and into this month has been under even more distribution. Break for the GLD below the 50-day moving average in November. It then moves below its 200-day moving average in December, tries to rally back above and breaks below it again earlier this month. So right now the GLD is up $1.27 to 160.70. We'll see if that 200-day moving average at 161 proves to be a resistance level. I think 165 is also a resistance level for the GLD. So it looks to me like this GLD could see lower prices ahead. So let's take a look at the weekly chart for GLD, and this just confirms my view that technicals are very weak here. You can see the different perspective that the weekly chart offers. Resistance, repeated resistance at the 10-week moving average, and now new resistance at the 40-week moving average. When you bump up against prior support levels like this and you can't reclaim these as support levels, all it tells you is that buying demand is drying up. And when you have a dry up in buying demand and you have a stock or ETF that is clearly under distribution, you tell me where this thing is likely to go. Okay, it's the trend is downward until proven otherwise. So gold not looking too hot here. U.S. dollar index today 80.36, up about 0.1% today. Let's take a look at a daily chart for the U.S. dollar. This is showing Monday's close, which was 80.26. So we're at 80.36 right now. You can see the 200-day moving average here for the U.S. dollar index at 80.83. Looks like resistance for now. So, we've been talking about the U.S. dollar index. This index is also in a fairly bearish technical setup, according to the technical analysis I'm doing on the index here. Let's pull up a weekly chart for the U.S. dollar index, and you'll see a what's called a head and shoulders, a bearish head and shoulders pattern here. Left shoulder, if you're looking at Tiger TV, the head right here, the right shoulder, and then the neckline. So the dollar has been in rally mode for the past 3 weeks, not really staging much of a rally. Again, resistance right now looks to be at 81. We'll look to see if this dollar index can eventually break below the neckline here, just under 79. Wanted to talk about the airlines. They've been really doing well lately. Here's a little-known airline based in Ireland, discount airline called Ryanair Holdings, working on 6 straight winning sessions here. Ryanair up another 1.7% today to 37.45. This is a tough one here. The ideal time to buy Ryanair was when it broke out in early November. Okay, you had the breakout right here. Now, what it did do is it came down to its 10-week moving average right around 34.95 and found support, and it is breaking out today. So the best entry point was at 34, but I got to tell you, seeing that it still looks like it's in the early stages of a breakout from a base that started in the spring of last year, this one still could be within buying range here. Doesn't look extended to me. You could put a swing point here around 36 or so, just over 36, and at 37.45, you're not looking at really an extended stock here. Another airline doing well, Alaska Air. Now, the thing with Alaska Air is this is clearly an extended stock out here. Okay, Alaska Air, ticker ALK, down 18 cents today to 46.17. This is really the story in the market. The story in the market that I'm seeing right now is the number of extended stocks out there. In fact, the number of stocks that are extended, to me, seem to have the upper hand over stocks that are still within buying range and stocks that still might be giving palatable entry points. So you want to be careful. I can't stress it enough, and I'm going to continue to stress it on my program. You do not want to chase stocks that are extended in price. You can see Alaska Air actually broke out in October. You can see a consolidation here that started in July. Volume came into the stock here late October, early November. So you had a breakout over, 38 bucks a share, and at 46 bucks right now, it just looks very extended to me. So be careful with the airlines here. They've been running for a while, and there's a slew of other stocks out there that have run up. And typically when you see a growing number of extended stocks in the market, it tells you that the market might be ready to pull back a little bit. We've been pulling back modestly over the past 3 or 4 days. I think if we do get a pullback, not expecting it to be severe, but a lot of that's going to have to do with what corporate earnings look like, and we're going to be seeing corporate earnings over the next several weeks. Breakout Investing on TFNN, folks. Ken Shreve with you. We will be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th, and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex symbol GPL, or on the Toronto Stock Exchange symbol GPR.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Ken Shreve with you. Breakout Investing on TFNN. Tom O'Brien show coming up at the top of the hour from 4 to 6 Eastern. 877-927-6648. That's the number to use. Give me a call. You want to talk about this market. Don't forget about my webinar coming up at TFNN Thursday, January 17th at 6:30 p.m. Eastern. It's called 2013, A Year of New Leadership. More details right on the homepage of TFNN.com. And also, don't forget about the upcoming Great Panther Silver Super Silver Giveaway. That's going to be going on between January 28th and February 1st. So check out details on the homepage of TFNN.com as well. Very, very quiet week of economic data, but we did hear from the folks over at Investors Business Daily earlier today. Their IBD TIP Economic Optimism Index rose 1.4 points. 3.1% gain in January to 46.5 versus 45.1. Remember, readings over 50 signify optimism, below 50 pessimism. IBD conducted the national poll of 839 adults from January 2nd to January 7th. I always look forward to the IBD TIP Economic Optimism Index because it's a much broader sample. I think it's just an overall better read on economic optimism, consumer confidence than the University of Michigan and the Conference Board. The IBD Economic Optimism Index has 3 components this time around in January. The 6-month economic outlook basically measures how consumers feel about the economy's prospects over the next 6 months. That was up close to 2 points to 44.5, still in pessimistic territory. The personal financial outlook, that measures how people feel about their finances over the next 6 months. That improved nearly 3 points. Good gain there to 54 in optimistic territory. And the third component, confidence in federal economic policies. This is a measure of how people feel government economic policies are working. Certainly a lot of fodder to think about there. That fell less than 1 point and is currently at 40.9, so in pessimistic territory there. Let's take a look at some movers today. Amazon, big solid breakout for Amazon yesterday, breaks out over a swing point of 263. Stock is under pressure today, not by much, down $2.33. That's less than 1% to 266.13. So still within the buying range here. And I also want to check on eBay because Channel Advisor had things to say about both companies today. eBay reverses after early strength. Not a great day for eBay. Hits a high of 54.20, now trading at 52.88. Down 63 cents on the session, 1.2% decline. Channel Advisor came out today and said that sales growth on Amazon.com's and eBay's online marketplaces slowed in December. That is really not a big surprise because we knew the holiday shopping season, Black Friday, Cyber Monday, big numbers. People came out in spades, spent a lot of money, and then it just slowed to a halt. And I think these numbers kind of played out in what Channel Advisor is saying about Amazon and eBay. But at Amazon, sales in December rose 29.8%. That's pretty good growth, but it was down from November's growth of 43.7%. Sales at eBay in December up 22%, down from 27.4% growth in November. So these numbers aren't a big surprise to me. I think it might be just giving investors a chance to take some profits here. I still think Amazon and eBay are still excellent growth stories, two high-quality tech names, both under a little bit of pressure today. But then again, the market is under some pressure as well, but not by much. Speaking of the markets, the Dow right now down close to 53 points, 0.4% decline to 13,331. Nasdaq Composite down about 6 points to 3,092. S&P 500 down close to 5 points to 1457. Let's take a look at some earnings reports. Again, earnings season really isn't going to kick in till, let's see, what's the date today? January. Yeah, well, I mean, we're looking sort of like the third week of January. That's when fourth quarter earnings reports are really going to start rolling in, January 20th, and then it gets real busy until the end of the month. But Monsanto came out today, nice gap up for the stock, up $2.56 to $98.50. Monsanto earnings up 170% from a year ago to 62 cents a share. That was well above the consensus estimate of 37 cents. Sales were up 21% to $2.94 billion, also above expectations. Sales at the company's largest unit, seeds and genomics, rose 27% to $1.1 billion thanks to strong demand from farmers in Brazil and Argentina. Good numbers from Monsanto. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis,
upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you. Thanks very much for tuning in. Always appreciate it. The phone number, 877-927-6648. You know, my overall take on the market here is that it is not doing anything wrong. I mentioned at the top of the show, you know, you're going to hear the negative Nellies out there. You're going to hear the naysayers, and you know, I don't know what the month of January is going to hold. It's been a good, solid start to the year. The uptrend is firmly intact. If we get a couple of distribution days, higher volume declines, meaningful higher volume declines by the major averages over the next couple of weeks, maybe that's fueled by, you know, weaker than expected earnings. Maybe, you know, Apple is going to, you know, fall apart because of disappointing earnings. Who knows? But, you know, the market can you know, usually put up with infrequent bouts of distribution. In other words, you can have distribution in the market, you can have signs of institutional selling, but when it becomes prominent, it will become too much for the market to handle, and then we could, you know, head into a meaningful pullback or consolidation. But I think it's still too early to throw in the towel yet. I'm hearing people say sell the strength. You know, I've got 7 long positions open right now in the Ultimate Growth Stocks model portfolio. None of those long positions are doing anything wrong from a technical perspective that would tell me to either lighten up in a position or fully sell it. Okay, so you know, and I actually have a short position that continues to work nicely as well. So Typically, I'm not going to short a stock during a market uptrend, but this is a short position that we've had since December that has, that is continuing to work. So I'm going to keep it open. But typically, the goal is to swim with the market tide, buy stocks during market uptrends, sell stocks, and maybe increase short exposure during market downtrends. Since we're not in a downtrend yet, I think it still makes sense to look for, long opportunities. But again, with 7 long positions right now, I'm pretty much where I want to be right now. It is getting harder to find actionable buy candidates out there since stocks have been running higher. We mentioned the number of extended stocks that are out there already. So that's my general take on things. Mentioned good earnings from Monsanto before we went into the last break. Here's another little-known company, but a company with pretty good qualities here. Team Incorporated. With a name like Team Incorporated, you'd think that this would be some sort of retail sporting goods company, but it's not. What Team does, their business is basically high-temperature, high-pressure piping systems used in the refining, petrochemical, power, and pipeline industries. Small company here, market cap of less than $1 billion, $832 million, and it is not a liquid stock because its average daily volume is only about 85,000 shares. But a big move for Team today because of blowout earnings. So let's take a look. Stock up 12.4% today to 41.67. Earnings were up 25% from a year ago to 66 cents a share, 6 cents above the consensus estimate. Sales growth, top-line growth impressive, up 27% to $200.6 million. That was about 18 million above the consensus estimate. So good beat on the bottom line and top line for Team Incorporated. What do you do with the stock here? The breakout for Team was in November. It specifically the week of November 23rd. So here was the last base that it came out of, and then you had a breakout here in November. A lot of people don't like to buy the breakouts, but if you had bought here, you'd be sitting pretty. So the swing point was right around 33.34. Stock is at 41.67 right now. This is not an example. You can see it had only been consolidating gains for about 4 weeks or so. Didn't come down to support, so kind of a tough one to buy here because it's not like it's coming out of a base. It came out of a base, like I said, in November. But, props to Team Incorporated for a solid earnings report. The numbers were not that good at Schnitzer Steel. This is sort of a company that reminds me of Alcoa, different business, but just a stock that's really having a hard time executing due to demand issues. Schnitzer Steel down close to 9% today to 29.11. They beat the earnings estimate of a penny. They made 4 cents a share. That was still down 84% from a year ago. Sales were down 27% to $593 million. That was about 20 to 25 million below the consensus estimate. So Schnitzer Steel having a rough day. And after the close today, don't forget, we're going to hear from Alcoa. Alcoa is not steel, but they are aluminum, and the estimate for Alcoa is for earnings of 6 cents a share. They lost 3 cents in the year-ago quarter. Sales are expected to fall 6.5% to $5.6 billion, but Alcoa also suffering from a demand issue as well. It has rallied nicely with the market here since the mid-November lows. It was $8, basically an $8 stock in mid-November. It's up to $9.12. And its technical picture has improved. Maybe a lot of bad news always priced in here. A lot of people will be talking about Alcoa's earnings after the close, and hopefully they'll have something good to say, and maybe that will bring more buyers into the market tomorrow. We'll see. Some other big movers today. Let's take a look at Signet Jewelers, SIG. Think a company that makes a big percentage gain like this, 8.7% higher today at 58.52. Short interest is not all that high in Signet Jewelers. This is the parent company of Kay Jewelers and also Jared. You probably heard those Jared commercials out there. Pretty good sales numbers during the holiday holidays for Signet Jewelers. Overall sales were up 4.7% in November and December. Broken down, K up 5.8% and Jared up 4.8%. So nice numbers from Signet, and buyers are in the stock today in spades. Again, last trading at 58.52, up 8.7% on the day. On the downside, let's take a look at Fusion IO. I remember talking about Fusion IO. This is, a company that a lot of optimism about this company's flash storage technology. But look at this. You hear me talk about resistance at former support levels. Look at FIO at that 200-day moving average. Bumps up against the 200-day line in November. Bumps up again in November. Bumps up again right here, and now the bottom has completely fallen out, down another 10.1% today to 1906. William Blair makes negative comments about the company, cuts the stock to market perform. That's basically a neutral rating from outperform, and said that demand for the company's innovative technology is kind of a little slower than they would have expected at this point. So not great news around FIO today, regarding from William Blair regarding FIO. Other bad news today, Yum. Yum has been in a world of hurt for some time now. It gaps down today, down 4.5% to 64.85. Problems still in China for Yum. Yum is the parent company for KFC, Pizza Hut, and Taco Bell. In China, they operate KFC and Pizza Hut locations. Yum got 44% of its revenue in 2011 from China, so it is a big deal when they come out and talk about soft sales in China. It expects same-store sales in China to now be down 6%. That is below prior guidance of 4% that it gave in November. So this is a stock that is not looking all that healthy here from a technical perspective, so not great news for Yum today. And how about shares of Boeing? Boeing takes a big hit yesterday, more downside today. I mean, talk about a technical breakdown here. I mean, it is still holding above its 50-day moving average. Got to give Boeing credit there, but this was a $78 stock on Friday. It is now $74.01, down another 2.8% today. Remember the story yesterday, one of its new Dreamliner 787 jets at Boston's Logan Airport. There was a fire. Nobody was on board, but it was an electrical fire. And the stock was actually downgraded to hold from buy today at BB&T. So no matter how you slice it, big sellers in the stock yesterday, and even more sellers in the stock today. You can see it is holding, or it broke below its 50-day moving average today. It is back above the line, but still trading near the bottom of its range. So not a great day for Boeing. Let's take a look at another stock here that is looking interesting. Catamaran Corporation. This is a stock working on 6 straight wins here. Off its highs today, up 19 cents to 51.97. Catamaran is a provider of pharmacy benefit management services. It's one of these PBM firms, but I wanted to take a look at a weekly chart for Catamaran. It's not a perfect base, but this is an example. We've seen a lot of movers in the market. Catamaran is near the top of a long base here that started back in the spring, summertime. So definitely worth keeping an eye on here, because growth prospects are pretty bright. Catamaran has pursued a growth through acquisition strategy that has resulted in big earnings and sales growth in recent quarters. In 2012, even though we're in 2013, companies have yet to close their, or are going to be reporting fourth quarter earnings. So for 2012, earnings here are expected to be up 37% from 2011. And then looking out into 2013, annual earnings are supposed to be up 63% from 2012. So good growth story here at Catamaran. Interesting base. Can't rule out a breakout here. And you can see good supporting action recently at its 40-week moving average. So Catamaran having a good day today. It's overall technical action in this part of the base right here, what I would categorize as a little bit wide and loose. So it's not a perfect base, not a perfect consolidation, but still near the top of that base, and we should keep an eye on it. And credit to Cyberonics today. Cyberonics, I was watching this thing early in the day, and the volume hadn't come in, but boy, technical breakout in spades today for Cyberonics, CYBX. This is a thin stock. It's a small cap. They make implantable medical devices used to treat epilepsy and depression, basic neurological disorders, but nice solid breakout for Cyberonics. And let's take a look at the weekly chart here, because this is actually, a good-looking breakout today. It's a thinly traded stock, but you do have quite a bit of volume here today. So you can see the breakout right here, early stage breakout. It looks like to me. So I don't think you'd be chasing here by picking up some shares. Anytime a stock breaks out, you don't want to chase it more than 4 to 5% past a swing point. Typically, I like to get it, no more than 2 or 3% past. But your swing point for Cyberonics would be right, in that 53, 50, 54 area. So at 55.15, I don't think you're chasing here. So nice move today by Cyberonics. And then hearing a lot of positive talk about NSM. We touched on this stock yesterday. Nation Star Mortgage Holdings, a huge gap up for Nation Star yesterday. It's extending gains today, up another 1.1% to 39.24. Hearing good things about this company, good growth prospects. They service residential mortgage loans in the U.S. This is a booming business right now. Yesterday, you might remember, we talked about it. The company paid $1.3 billion to buy $215 billion in residential mortgage servicing rights from Bank of America. So we'll take a look at a weekly chart for Nation Star as well. And what you have here is just an unequivocal base breakout here, and this is a company that has not been public for very long. So again, growth investors, you want to catch stocks in the early stage of a move. This to me looks like a second stage base breakout for Nation Star. Definitely one to watch out there.
TFNN is
falling under the category of not acting right. Let's take a look at LinkedIn. I've been pretty vocal about LinkedIn, saying that I think this stock has the potential to be a leader in 2013, but I just don't like its technical action at all over the past couple of weeks. On the one hand, it was forming the right side of a base here. Would have liked to see it get higher to that 120, 122 level and then pull back. So, but what it did was, starting in December, it started to drift lower. But you've had some kind of wild, erratic price action during this pullback. The stock is just not participating at all in this market rally, and that's a bit perplexing. It is down another $1.93 today, 1.7% decline to $111.07. So who knows? You may get an analyst upgrade at some point. Maybe it eventually gets into position for a breakout over 117, but its technical picture starting to definitely look questionable at this point. So we'll keep an eye on LinkedIn and see what the future holds for this company. All right, final break coming up, folks. We'll be right back, about 4 minutes.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you. About 5 minutes left to go before we put the finishing touches on Tuesday's session here. Dow down close to 50 points, 13,334. NASDAQ down a little more than 7 points to 3,091. S&P 500 down 4.5 points to 1457. Mentioned volume earlier in the show, and not much volume in the market today. Surprise, surprise. Volume on the New York Stock Exchange tracking very close to what we saw yesterday, which was 623 million shares. NASDAQ volume also tracking very close to what we saw yesterday, which was 1.67 billion shares. Fourth quarter earnings season is fast approaching here. Today is January 8th, so not going to be busy next week, but we'll start to get really busy. We'll start to get a little busy next week, but then really busy over the next couple of weeks after that. So mentioned after the close today, Alcoa is going to be reporting results. Let's check in on Alcoa ahead of the numbers. Just looked at Alcoa not that long ago. Recently climbed back above its 200-day moving average, looking to make it 5 gains in the last 6 trading sessions. Decent volume in the stock today. Not really moving too much, though. Only up a penny to $9.11. Again, not too many people expecting Alcoa to change its tune much from prior quarters where they've been talking about, slack demand and, these kinds of things. So we'll see what Alcoa has to say after the close. And let's see, what else do we have going on after the close? Another interesting company here, Global Payments. They're going to be out with numbers after the close as well. EPN, you can see a much different looking chart than Alcoa. Global Payments has rallied nicely with the market, was trading around $41.50 in mid-November. It's now up to $46 a share. This is a company that provides electronic payments transaction processing services. They're expected to earn 87 cents a share. They earned 86 cents in the year-ago quarter, so small EPS growth. Sales up 8% to $574.8 million. So see what Global Payments has to say after the close. And then tomorrow, before the open, Constellation Brands, STZ. Constellation Brands... big move for the stock last week. Big breakout when the markets took off. It's been under quite a bit of pressure over the past 4 trading sessions. Down 25 cents today to 36.16. They'll be out before the open tomorrow, and then after the close tomorrow. Going to be interested to hear what PriceSmart has to say. This is a stock that's looking quite vulnerable here. It's been able to hold above its 200-day moving average basically since mid-November, but underperforming today, down 1.9% to 75.79. PriceSmart is basically known as the Costco of Latin America. Pretty good fundamentals here, but big sellers have been in the stock since early November. It still looks to me like a stock under distribution, and after a big price move already, this one also looks like a late stage base to me. But earnings are expected to be up 32% from a year ago to 62 cents a share, with sales up 12% to about $535 million. So we'll see what PriceSmart has to say Wednesday after the close, and then Friday we've got numbers from Wells Fargo. A little bit of time remaining in today's show. Let's take a look at Regeneron Pharmaceuticals. JP Morgan's got his big healthcare conference going on in San Francisco. Regeneron gave preliminary sales for its key drug, Eylea, which treats macular degeneration. Stock is off its session lows, trading at 176.08, down 3.5% on the day. So Regeneron under a little bit of pressure, but has come back from earlier losses. Thanks for listening, folks. I'll see you back here tomorrow, 3 o'clock Eastern. Have a great afternoon.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.